Hey, everybody. Hope you're doing well and surviving the heat that July is bringing us. I was absolutely blown away. And I'm a bit of a geek when it comes to the mortgage side of my industry as well as the data that's involved in it. But I just wanted to give people a sense of what it means for the rates to have dropped a full point. So we opened the year at about 3.75%. And last week, I had several lenders, including our primary lender, that wrote mortgages for 2.75%. So let's talk about what that actually translates into for a buyer. If you were to buy a property with a $300,000 loan at the beginning of this year at 3.75, your monthly principal and interest, now this doesn't include your taxes and your insurance, but your taxes and insurance for that house are going to be the same no matter what. So we're just focused on the principal and interest because that's what the rate affects. So, but at the beginning of this year at 3.75%, you were looking at a payment of $1,389 for a $300,000 mortgage. Last week at 2.75%, that number was $1,224. That's $165 less to own that home on a monthly basis. Now, to give you a little additional perspective, and the slide I have in front of you, just so you know, is a look at our mortgage rates since Freddie Mac has been doing their weekly mortgage survey. So 1971, that was the year I was born, the rates were just above 7, approaching 8, about 7.75. This year we've hit 2.75. The lowest since Freddie Mac's been running that survey, which obviously is 50 years. But I suspect if we were to take the numbers even further back, we'd find out that it goes even farther back than the last 5 decades. So we're at an all-time low for Freddie Mac's survey and the lowest we've been in 50 years. This is actual breakdown for what it's worth. This is published on a regular basis by Freddie Mac, but just in case you're wanting to see this year's high and low, 2.75, 3.75. Last year's 3.63 was the low, and the high was 5.34%. But the number that I want you to remember when you finish watching this video is 10, as in 10%. So right now, if you buy a house with a mortgage that's 10% more than the $300,000 that we were just talking about, in other words, $340,000, by virtue of being able to see that 1 point drop over the course of this year, you can actually afford a house for the same amount of money if you were good with that principal and interest payment of $1,389 if the loan was $340,000 right now versus the beginning of the year. So that's amazing. You've actually been given more than 10% additional buying power at this juncture, at this time of year. We are living in some amazing times. So if you are thinking about buying, come talk to me. Cheers, everybody.